starting off on the economic calendar. Um, I want to see on the week so I can see what days volatility is going to enter the market. I have mine in USD because every single pair I trade, everything I trade is affected by the USD news, red folder news. So Monday, 145 news, not really any restrictions on that. Maybe I'd have a restriction of entering at 144 maybe, because obviously I don't want to get wicked out, but usually doesn't really affect the market that much, so not bothered about that. Tuesday, nothing. Wednesday, nothing. This is a day we're trading. Today's a Wednesday, so nothing on Wednesday, which means I can go into the day and enter at any time. Obviously, model presented, but I can trade at any time and shouldn't expect to get wicked out by the biggest candle of all time. Thursday, 12:30, which is 1:30 news, but obviously times went back, so now it's 12:30. And Friday also 12:30. So Thursday and Friday, no trades before 12:30 unless everything is present. Literally every single thing I want to see needs to be there, or else I won't put in a trade. So now that we have the economic calendar sorted out, we can go into Wednesday, go into the market and see what the previous day did, which is going to decide what I should do on the next day. So, like any day, we want to get started on the daily to give us a better scope about what price did the previous day, and we can look to the left and see if any confluences that can help us decide what price is going to do in the day we're going to trade. So, look in here, this candle not included, previous day expanded, Monday expanded, and Tuesday expanded. Tuesday candle was weaker than Monday's candle. As you can see, Monday 359 points, Tuesday 231 points. So you can kind of see a weakness in the second candle. So with that, I can look and I can say, okay, potential of price maybe not want to go higher. We have this bearish candle right here, and we also, if you look right here at this candle, oh, my hour's gone. Look at this candle right here, the candle of Monday. The candle of Monday opened up with no wick. Now, if you look, you zoom out, how many times has price done that? On Monday, it did it here, but it ended up during the week creating that wick. Probably be better if I did it on the weekly. So if you look on the weekly, very rarely, if ever, does price open up and not create a wick on both sides. Now, this is not for pattern's sake. It's just acknowledging a sort of common theme you see in price. So very rarely you see that there's no wick, even if it's like a wick like the smallest wick of all time, like this. Even if it's a wick like that, you'll still have a wick. So I'm gonna look for reasons for that wick to be created. If price gave me reason to go higher today, I would have went higher, of course. But I'm just gonna look for reasons to confirm something I see regularly. So I want to go to the 4-hour and look at the weekly profile and see what's up with that and see if I can use some of those things that happened in the previous day to confirm what's going to happen today. So going over the 1 hour, I did say the 4 hour, but it's easier to see these things on the 1 hour. For me anyway, I can see more trading steady deliveries on the 1 hour than I can on the 4 hour. So I'm just going to use it for that. So Tuesday, as you can see, expanded. Now what we have here is an SMT. So we have an SMT right here with ES. NQ took previous day high. S&P did not. So we're looking at that and we're saying, okay, this can validate a short. However, you're going to need more confluences to go with that. So price traded above the open of the 1800 hours candle, creating a short wick. Short wicks are usually an indicator for expansion bodies. This is not all the time, but I found that usually when the wick is short, that's usually an expansion candle. So what else do we have? Change the delivery right here. Okay, this can be an idea to confirm this high being in fact the high of the day or the reversal. So what I'm going to look for is another close below a series of bullish candles so I can confirm that potential reversal. So we have here at 3 o'clock, price trades down, closes below the series of up close candles. If you look on the market, 3 o'clock is a sensitive time for London reversal. The 3 o'clock kind of area, so 3 o'clock, 3:30, 4 o'clock, 4:30, that kind of, that kind of hourly hourly time window. So if you look at that, you'll find out that these kind of times usually hold the high of London, which you can then use for the continuation of New York. So this high not traded to. So seeing this and not being hindsight, you can see this close over here. Maybe you would short here and find confidence in the fact that this high holds. Not a bad stop loss, 38 points, not bad at all for the previous day low target, which is 1 to 4, not bad at all. However, you can zoom in and get a better entry and maybe, lower risk. So I'm going to go down to the 30 minute and we can get a more of a zoom in version about what is going on right here. Okay, so after the 30 minute, we can see that we have that SMT. So we're going to leave that there. We have this 30-minute close below the bearish candles. We can see on the hourly, but we can also see on the 30-minute. We can use this one as well, but this one's a series. We also have a 30-minute close below here, with this being a protected high because of the close below. So what are we looking for now? So what I'm looking for is reasons to confirm that this high should be the high that we should trade away from, which is confirmed by this, but I want reasons for me to say, okay, I want to create the move down. I want to try to frame the move down, because if you look at 6 o'clock, we traded higher into it. We crossed past the 50% of the bodies of this, which is a unsafe place if you want to short. I like to see reactions that are instant. So with the move up past 50% and a body closure past it, I want to see an entry confirmation in this leg of price to help me short lower. So I'm going to go down to the 15. see what I can find. So you have here on the 15, price trading into. Now it's trading away. What do I have right here? Closes below these series of close candles right here. Make this black. Let's make a different color so it doesn't get confused with this. So we have this right here. Now what I want to see is I want to see a potential to move down lower. I like to use SMTs a lot because they usually help me identify how to not get manipulated out of moves. So if you look right here, there's an SMT with ES. Now this can be used as my confirmation to go lower, but because you have it trading again about 50%, I'll go down to a lower time frame. I'll go down to the 4 minute and I'll wait for another close right here. So we have a close right here on the 4 and price trades lower. Stop loss at this high, 10-point stop, very good stop. I don't think this is my exact entry, but get the idea. And TP was at this low. I took one partial right here in hopes to trade down to the previous day low, but after price was starting to reject, I took out my position. I then waited again because I knew price was going to be creating more moves for me to get involved in. So we have price taking out this low and coming back into the range, coming back into the 50% of the range. Going to the 30-minute time frame, we can see right here, price tapped into the 30-minute trailing state delivery. We're now rejecting from that trailing state delivery. So what I'm thinking about what next to do is find a potential entry in this to go lower. I was not quick enough to get involved in the 930 candle right here, so I went to a lower time frame and I found myself on the 4 minutes. Price tapped into here and I saw these up close candles right here, 3, and I said to myself, I'm going to wait until price closes below this one right here. And this is where when I get involved. My entry was 418 and 3/4. Stop loss at this high. And TP was at this low right here. 4. Ooh. Put the wrong one in. Let's just leave it 418 3/4. I'm just gonna leave it here, 450. At the high. So obviously I took partials on the way. I'm pretty sure I took one here. I took one here. And I took one also here. And then the runner I had, I stopped it out once we got too many bullish candles for me to like. I would have put my stop here, but no point me having price trade up 130 points from my last exit. So yeah, that was the trade. 2 of them actually, but 2 of them in the same direction. One that was stopped out in profit after a partial was taken, and another that was had literally most of my PTs hit, but one contract. So that is all I have for this one. I hope this was helpful for anyone watching, and see you in the next one.